Hey guys, how are you? Vladimir here from Traders Academy Club, and welcome to the weekly Forex forecast and market analysis for the week of 21 to 26 June 2020. So happy summer to you and yours, and I hope you are well and safe and that you will enjoy this official beginning of the summer and have good time as much as possible in our reality with your beloved ones. So my best wishes to you and all of yours. On Monday, like every week, I will publish the text version to the forecast in my blog. So on Monday you can come to the blog vladimirabakov.com and you will find this post that would be available for you. So just scroll down and you will see there also of course the video and also the instrument summarized for you in a written format. So for your comfort, just follow the text version, and the idea here is simple. You can always refer to the analysis as was described on the video. If you are watching us for the first time, I would like to welcome you to our community, first of all. And I would like to invite you to subscribe. Just follow the subscribe button below this video. And please remember to enable the ring notification, because I upload videos during the week for you with trading ideas, so you can be notified when it's available. As well, I would like to take the opportunity and to invite you to our trading club, the Traders Academy Club, and to join our free Telegram channel where you can enjoy from daily trading ideas and market analysis. Both links could be found below this video in the description or in the comment section inside the pinned comment. For today, I prepared a very interesting list, so I would like to begin. The first one, Euro versus the dollar. According to the longer analysis, that might be a possibility of a triple cycle with the bullish divergence, which we face all the way from the beginning, and we might be experiencing a corrective cycle. Corrective cycle could be two waves, corrective cycle could be a temporary range. We don't know to say that, but we do know that if that analysis is correct, then buy drops is the correct thing for swing trading. On the shorter view, we got this opportunity during the week, which I also shared with you in my YouTube channel as a day trading idea. If you missed this video, right now in the right top corner you can find this video directly. If you are watching from the mobile, you can just click on this exclamation mark sign you have on the right top corner of the video and to enjoy from all the options available for you there. So that's how I see that. After three waves to the upside, we are making the ABCD correction with the possible divergence yet in creation. And if my read is correct, then I would expect to see that stopping somewhere inside this area and delivering the reversal to complete these bigger legs. So the way I would like to follow this pair is, first of all, again, if it is correct analysis, then I would like to see this divergence coming in play, the trend line being broken, but mainly to see a bullish return. Divergence is a very strong sign, levels is very strong sign, but at the end of the day, in order for the market to complete the continuation sign and not just a pullback, we will need to see the price creating the higher highs, higher lows. That what might verify that we are back to the bullish view. As long as it didn't happen, the price might go and dance around, providing almost no real opportunities. So this is how I see the euro dollar and how I would like to approach that. Again, assuming the longer term analysis is correct. Let me know how do you see the euro dollar and what are your views from this pair. a very interesting fact which you can see on the comparison. By the way, I was asked a lot, where do I look at the retail positions? So there are many ways you can find the retail positions. The best report to refer to, and not just from the retail side, would be the full COT report. But to understand where the wind blows, it's enough to look. Many brokers have such inner things, and that's enough to understand how retail traders' brain works like. And the reason is because the beginner of the retail traders do pretty much the same mistakes. So that's why when you refer to one place, the numbers on the other resource would be pretty much the same. Okay, so I'm looking here. This is on my FX book website, a comparison of the community outlook for the buys and sells of the different instruments. And what I see here is clearly bearish control. As you can see, when you stand on the numbers, it's not crazy numbers, but from all the accounts connected to my FX book, that's pretty much where it stands. And right now, as you can see, more than 70% are in short, with average short price at 110, which means very early. Okay, and those who long it also a bit earlier. So that's why, again, when you find the best timing to trade, it's somewhere in between, when the positions are kind of in loss from both edges. And that's why you want to be smarter, and you want to verify, not just jump in because a level is reached, or because there's some strong support, or because the MACD ticks. No, at the end of the day, indicators are there to indicate, and that's how I want you to remember the things. But it doesn't mean it's not good to use them and rely on them. I myself am a big fan of the MACD, but the thing is that here is to write them in the right understanding and the right approach. The indicators indicate. The price gives the fact. So when the indicators indicate, but then the price follow, that's what you will want to see. If you are in a position, but the price doesn't follow what the indicator indicates to you, and if you are already involved, so don't try to be smarter than the market. This is your sign. If the market doesn't follow what the indicator indicates, that means not the market is wrong, but the indicator gives a false indication, and it's part of trading. And it's very important you understand it, because and I myself aware of this mistake. I was doing it a lot in my early years of my trading career, giving too much value and too much respect to indicators. Indicators are great, amazing indications, but at the end of the day, indication without the price corresponding to it, or making a proper response to what the indicators gives, excuse me for my English mistakes if I do any, it means nothing. There is no value for that, and that's why it's very important for you to understand it. The moment you understand that, you can basically start and apply one of the main successful factors in trading, and that's cut early and let winner runs. So when you recognize that the indication doesn't follow by the price, that's your time to step back. Not the market is wrong, the analysis is wrong. Remember that. So that's my view for the euro dollar. Once again, let me know what do you think about it. And I would also like to ask your help, your support in the channel and in my work that I bring to the channel. This video is completely free for the community. So if you like such videos and the way they are presented to you, please feel free to share it with anyone who you believe can have a benefit by watching them. They are again open to the community, and hopefully they deliver to the right place and help people to understand the things from different angle of view, and well, hopefully to help them in their trading. And also I would like to ask you, if you find it useful, good video, helpful, please show your support back by hitting the like button below this video and dropping a comment in the comment section. Your help is very important to the channel to continue and be relevant and to grow and to be there for the community. As simple as that. So thank you very much in advance to all those of you who help. Let's continue. The next one on the list is going to be the Aussie versus the franc. For the long term, I expect here a serious rally. So basically drops, and I would be looking for buys. But on the shorter view, we are here in a position where we can see the price slowing down, making a slowing divergence here, hinting for some sort of correction. This is also a key resistance here, as we can see. Very strong zone. On the very top, we were creating right here on a very, very strong zone. Some false breakout surrounding by engulfing. Then we got a series of lower highs, lower lows candles. And that daily candles, not just coming out of nowhere, they also create this trending structure, which later on was followed by a corrective structure, by a bearish hidden divergence and trendline breakout, which makes me think we are now in corrective phase. And once this corrective phase completes, again assuming my analysis is correct, I expect this divergence takes place, and from the supportive zones we have here, once that is finished, to start and look for further continuation upside on the longer term. Of course, we would need to find evidences here, as I mentioned on the euro-dollar fact, right? That the price reacts to the bullish direction afterwards and continues. But until then, this is the plan. Another interesting thing to pay attention to here, that's where it all comes from. And as you can see from all the pivot zone, look where it all started. From critical weekly area of pivots, and now all the daily areas holding any attempt of the rally. Well, at least by far. Very, very strong indication here of the levels coming on according to the price movement. And the next one is the AUDCAD, which also I find very interesting. Let me start from these pivots. Look what happens here. From widening, you see what happens with the orange lines. It's widening, opening resistances, and then we start to shrink, getting lower and lower, the distance between the resistances. That's a very strong indication by itself, and also we can see how strong is all the daily zone right now, which makes totally sense after the uptrend and the range we currently are facing. The levels are shrinking, but the visual understanding of this plus the way that the price forms is a great help. Now, what and why do I like this one? We got a false breakout here. We got the lower lows. All that is history, but then afterwards we got the range. Range by itself could be a great indication of a beginning of the correction. Range is a slow down, and this range is specifically creating also the lower highs and lower lows in it, which is very, very lower highs, and this is the first low, of course. So that's what we will want to see here, and that's how I want to work with this pair. We need to get out of that. We need this divergence line to be broken. Once that have RSI, as you can see, this supportive area also. Once we get out of that, that becomes a very possible scenario of a corrective cycle, something like that, and deeper correction before next possible rally will take place. And why would I pay attention to that? First of all, the weekly under heavy bearish hidden divergence. That's a pretty strong fact by itself. The 3 top spikes on the weekly candles is a great sign that the buyers are slowing down. This is a key resistance that is come very close to the 0.95 psychological area. The daily is a very, very good divergence that I love to see. So this is a very strong hold of this area, as you can see here. We got it with inverted hammer on the top here, the shooting star. We got it in a beautiful empty spike here after the Marubozu. The way it forms with the candles, with the levels, is a great indication. But we do need the price to fit in, because if we continue and hold this range, then what will happen here is a very simple scenario of one more high, probably to around 0.96 area from the weekly here, and then the divergence to recreate one more high, and then a serious move down. So I definitely find this pair interesting, but it's very important to mention that is mainly for those who are okay with swing trading, because the shorter term in such variations could be noisy like this. And those of you who don't like to be involved in noises and getting sensitive to any price change, better to avoid such instruments. As simple as that. Next one on the list is going to be one of the instruments that once in a while I love to follow. That's the sugar. The way I see this one, on the longer term, we have here a great, here and here, divergence coming from the round number 10, massive supportive area. That's a good zone for corrections. And the way I see that, we are going to complete the last high here. How high will that be, I don't know, but I expect it to happen. And the reason is I don't refer to this wave is because it's, if I count this way, then it becomes that the middle leg is shortest. In an developing trend, it is not a correct way to view the things. So that's what I would like to see happening. I expect one more high to be developed. So we are currently facing some sort of a slowdown by the range. So two scenarios here, breakout and continuation until we complete this divergence on the 4-hour and the daily. Likely to assume it's going to be on this open zone. And then some corrections and further continuation. Sugar starts to be very interesting. Other scenario here is that we become here as ABCD and then forming the continuation until the divergence completes and the buys take place. So the buys complete, sorry, not takes place. So that's a very interesting scenario that I see. And also in a trending structure, it's good to pay attention to the ongoing supportive zone. Look what happens here. Again, from widening zone, we're shrinking a bit, as you can see. In a trending structure, that's normally a hint for a boom, explosion for a next leg or next development. That's what you will want to see happening when the trend holds. The supportive zones hold, not breaking through. Supportive zones hold, and these zones basically opens up further. So that's what you would want to see. These areas having a good distance, right? And on the other side, the supportive zones hold the price when it comes to comes to visit. Next one, S and P. What do we have on this one? Let's see. So daily becomes as a cycle that we have here. Can't say I'm too big fan of that, but it's still there. And mainly the fact that I don't see the economies with a bright future yet. The unknown is yet much stronger than the known. more and more talks about the second wave of coronavirus. I don't know. I'm not going to comment what I think about it. I'll stick to the facts. It's still there. It's still here, and it's still scary. So, will that lead to other lockdowns, as many places started to talk about again, or will that lead to any other sort of actions? Early to judge. But the way I see that, we are currently in a corrective phase, and the main part here is this. After the daily wavings and the fact that we slow down here with this divergence, and now developing the 3 waves down, sort of 2 waves correction with the double top, trying to break through, it starts to look good, and the price should follow up this. If this is a first leg, then we should see this low leading to 3 lower highs, lower lows, hinting that the corrective phase, at least corrective phase, is on, and then we can expect, and then we can expect that to go and develop until a divergence will be completed. So again, will that happen or not? I don't know. All the facts show it's a good possibility, but the main factor you want here is the creation of the lower highs, lower lows. Otherwise, this is just a correction by itself before a new high. So rushing into is wrong to make conclusions. If you are involved, then remember, indication and price have to synchronize. It's sort of a rhyme, right? And what do I mean by that? If your indication led you to be in the position, then you will want the price to follow. If the price doesn't follow, this is the say from the market, step back. Do not force. Okay? Remember these words, and I hope you find them useful. Next one and the last one, Bitcoin. What do we have with this one? I shared with you this idea also on my daily videos that I upload for you, but would like to explain here a bit more from the swing view. We are currently facing here a slowdown of this cycle with a massive psychological zone around the 10,000. It was false breaking through that. Divergence is in play. So I would expect to see here some sort of a correction. And this correction makes total sense by making the lower highs, well, it's not drawing, by making the lower highs, lower lows pattern here. So we could face some sort of a slowdown, like a range and then the move, or the ABCD to complete and then the breakout. But my personal view is that as long as this top holds, the bearish view on the short term is the controlling one. Let me know, how do you see the Bitcoin, if at all, and what would you expect to see from this price, from the Bitcoin? Okay, just drop your idea and your comment. How do you see the Bitcoin below in the comment section? And that would be all for this week. Great instruments, very interesting price developing. Will the market provide or not? We don't know, and I want you to remember that, right? Prediction, it's not a way to trade. You will want the facts on the chart. If they synchronize with the way you analyze and the way you expect the market to move, perfect. That's where you have to follow the trade. If it doesn't develop, this is the way from the market to tell you step back. Not the market is moving wrong, your analysis is wrong. And that's the way I always react to the market. If the market doesn't follow my lines, that means my analysis is wrong. And I'm not going to force my analysis on the market because I am wrong. So I have to do the things the different way. And I want you to remember this. It's very, very important when you approach the trading. Thank you very much for your time watching this video. Stay safe, be well, and best wishes, and happy summer once again to all of you who going to have fun. Happy Father's Day to all the fathers out there. We celebrate here in Canada the Father's Day. So happy Father's Day to everybody, all the fathers out there. Be proud of yourself and do the best for your kids and your families. And once again, I would like to invite you to join us in Traders Academy Club and to join from all the trading ideas and the market analysis we do on daily basis, backed up with a full trading report for your comfort and your convenience. The link to join us is right below this video in the description or in the comment section, in the pinned comment. Once again, thanks for your time. Stay safe, be well, and I'll see you during the week. Yours, Vladimir, Traders Academy Club.